Hi, I'm Merv Hecht from W Yield. I'm here to give you a little weekly update on what I've been doing to give you some thoughts to jog your mental processes and see if you want to do something similar. In the past few weeks, I was focused on the decline of the euro. Having decided that the euro would go down, I bought puts. I bought $3,000 worth for myself, and I bought $33,000 worth for a French company whose investments I handle. I don't think I can recall in recent history having that much success in a trade. When we bought the puts, the euro was trading at around $1.23, and within a month it went down to about $1.12. We tripled our money. My $3,000 went up to just under $9,000, and the client's $33,000 closed out last Tuesday at $104,000. I mention that to you primarily so that you see the power of options. It's unusual to be able to triple your money in a month, and I'm not saying that's going to happen to you or me again in the near future. But the fact that it can happen when you do some research and come up with a good idea seems to me to be interesting. There aren't that many places in life that I know of where you can get that kind of result. So I closed out the euro positions and started searching around for the next opportunity. And I've decided that the next opportunity is in oil stocks. I don't think it's going to be nearly as quick an opportunity as the decline in the euro turned out to be. But I believe that oil itself has gone down from about 100 to about 40 or 50, I think 45. And I don't know why that is exactly. Maybe I'm paranoid, but I suspect that the United States has somehow manipulated the price in order to put pressure primarily on Iran during the nuclear talks and maybe to some extent on Russia because of their aggression in the Ukraine. But for whatever reason, it's dropped down a lot. And I feel pretty comfortable that within the next year or year and a half, that it's going to come back up. Not to where it was, not to 100, but I think it'll come up maybe halfway. And so I bought for myself and for a number of clients the three leading oil companies, in my opinion. Those are Occidental, Chevron, and Exxon. Some people like Shell Oil as well, but that's sort of a different company in a way. So Occidental is currently trading at $80 a share. The nice thing about it is it pays a 3.6% dividend. Chevron, the symbol being CVX, is trading at about 102.5, and it's paying a 4.2% dividend. Exxon is trading at about 87.5 and is paying a 3.2% dividend. So all the dividends are really good, and if you have the cash, you can afford to hold it with those returns until oil comes back up. Just to get an idea of how far these stocks have come down, Occidental was 101 and is now 80. Chevron was 135 and is now 102.5. And Exxon was 105 and is now 87.5. So it's a 20 or 30% decline in really good stocks paying really good dividends. So I've just been buying the stocks. and then I'm going to look at it for a while and decide whether I want to write calls against them. But I can write calls against them and pick up some additional income if I want to accelerate my earnings. For example, I've been looking at the August calls. I can sell a call on Occidental, the August 82.5, and collect in $4 a share. So that would enhance my yield from the 3% dividend, I guess probably up to 7 or 8%. Another possibility for those that don't have the cash to buy the stock or feel that the stocks aren't really at their lows yet would be to sell puts. And again, just by way of example, you could sell the August Occidental put about 10% below the current price and also pick up about $4 a share. So those are my ideas for this week. We'll watch them and we'll get back and look at them together in the near future. Thanks for listening.